They did it. The smart money has arrived. Different times are ahead for Bitcoin. Mass adoption is now inevitable, and why this is your chance. Weeks and months have passed, but this Wednesday, the SEC has officially approved the Bitcoin ETF. So from now on, 11 of these are tradable. So far so good, but for most people this opens up a whole lot of new questions, like why do we even need an ETF, and is it really a good thing for Bitcoin itself? But don't worry, I will not only tell you what this is all about, but especially what it may do to the crypto markets short and long term. So after this video, you will know how to capitalize on every possible future outcome, regardless of markets going up or down. So before we get to the beefy part, let's rewind on what the Bitcoin ETF is really all about. For the time being, crypto could be bought on a dedicated crypto exchange, like the ones we see here, Binance, Coinbase, Kraken, and so many more. This involves a steep learning curve. You have to know about how the exchange operates. You have to know about wallets. You have to know how to send your bought crypto from the exchange to the wallet. And this brings us to the next point, custody. You have to know which kind of custody is the safest one. If you're around for some time, you know it's a hardware wallet. It's best to not store your coins on the exchange, to leave it on the exchange. So this brings us back to the Bitcoin ETF. The Bitcoin ETF is especially interesting for big institutions, pension funds, hedge fund managers, or in general, people who manage customer funds, not their own money. But on the other hand, it's also interesting for individuals who manage their own money, but they don't want to mess with the crypto ecosystem. They don't want to learn about all these things, the exchanges, the wallets, and so on. They want to use the broker they use for buying their Apple stocks or Tesla stocks. They just want to integrate Bitcoin into their existing portfolio. So for example, they want to allocate 5% to Bitcoin, but they don't want to go out of the broker experience. I'm basically talking about boomers or non-tech affine people. Looking at the institutions, we know that they are slow, they are heavy, they like what's been proven, and they are regulated. Also, if you manage customer funds, you cannot buy everything. You can only buy what's regulated as well. After last cycle, a lot of institutions like PayPal, MicroStrategy, or even whole countries, I'm talking about El Salvador, adopted Bitcoin in a big manner. So the attention of the big old players in the financial markets was growing already. Therefore, the 2021 bull market is oftentimes called the beginning of mass adoption. The TradFi, traditional finance, would basically just hate Bitcoin. Or as Warren Buffett put it, Bitcoin is rat poison squared. In order to close this gap between institutional interest, institutional demand in Bitcoin, they created a vehicle backed by the biggest financial institutions of this world, like BlackRock, and enable funds to simply buy Bitcoin in a comfortable, easy, known way. There is nothing to learn about, there is no steep learning curve. It's fully regulated, and this in turn means everyone who's able to buy a stock or an ETF is now also able to buy Bitcoin. And what this means in the end is that the biggest amounts of wealth and the biggest amounts of money are now able to flow into Bitcoin steadily over years and years to come. In the last cycle, what institutions would do is to get indirect exposure to Bitcoin in the crypto markets by buying Coinbase or MicroStrategy stocks. Because Coinbase, as the first crypto exchange having an IPO and therefore having a stock to buy, was heavily affected by Bitcoin's volatility, and also MicroStrategy, with its CEO Michael Saylor having bought vast amounts of Bitcoin, became also really affected. So this was kind of the indirect exposure play for institutions. But this is nothing institutions have to worry about anymore, because now we have 11 Bitcoin ETFs. They all started trading on Thursday, January 11th, and got approved by the SEC on Wednesday, January 10th. The most prominent ones being BlackRock, VanEck, and WisdomTree. But we also have some crypto native companies like Bitwise or Hashtags. Talking about Bitwise, in case you haven't already, there's an amazing and funny teaser about their Bitcoin ETF, which was released end of December, I think. I just have to show it to you. It's amazing.
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
The funny thing about this trailer is the old man in the middle is imitating Peter Schiff. And if you don't know who Peter Schiff is, it's basically a gold bug. Someone who's really a fan of gold, who is investing into gold in a big way. And on Twitter, he is known to bash on Bitcoin all the time. And now in this teaser, he's shown as switching his mind on Bitcoin. Step by step, more wealth will flood in that uses these Bitcoin ETFs. For example, Franklin Templeton, a very traditional wealth management company, also hints at buying Bitcoin through the Bitcoin ETF with the laser eyes everybody knows from last cycle. If you don't know about the laser eyes, it just means that you are sure Bitcoin goes to 100k. That's just about it. The days before the approval were actually quite bumpy, plastered with rumors, last-minute changes, and even supposed hacks. So a couple of days before, on January 6th, all of the applicants, the 11 Bitcoin ETF applicants, updated and filed their last amendments. This was about the last minor changes the SEC was asking for before an approval could hit the markets. And then something really interesting happened. The official Twitter account of the SEC, the US Securities and Exchange Commission, got hacked supposedly. They themselves posted that the SEC X account was compromised and an unauthorized post was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange traded products. This was on January 9th, one day before the official approval. The thing is, of course, this might have been a hack, but to be honest, I rather think this was kind of a test of Bitcoin's volatility in case of an approval. I will show it to you right after on the charts. And then finally on January 10th, we had the official SEC approval without any hack, without any rumors. This was the real thing. Then if we have a look at the charts, we can perfectly see how the SEC hack pump affected the markets. Within a day, we had like a 8 to 9% pump. And after the SEC posted that this was just a hack, we had a heinous 5 to 6% dump, then followed by the real official SEC approval, which was again a 9% pump approximately. And then since we started trading the ETFs, we got a heinous 13% dump. A couple of days before all this, we had another pump and dump, which was due to ETF approval rumors, which was posted by news portals like Reuters, and also caused this kind of pump and dump structure, which was again 7 to 8% up and down. All in all, this was kind of the same price action pattern all over again for 3 times, which has left its marks forever on the Bitcoin chart. All right, we got the Bitcoin ETFs. What's next in the pipeline? As it seems, the first Ethereum ETFs had already filed for approval, for which the final deadline is around end of May this year. We'll see how this plays out if we get the same hype we got from the Bitcoin ETF. So now that we know about the most important facts about the ETF, the question now becomes, how will it affect Bitcoin itself? How will it affect price? How long will it take to affect it? Can we draw any parallels to past events in the crypto space as well in the traditional financial markets? If you've been in the crypto space for some time, you will notice that there's a shift in mentality. For the longest time, Bitcoin was opposing the traditional financial system. Actually, it was created in 2008 after the big financial crisis to show that there is something missing, that there is something not working properly, and Bitcoin should fix this. Now we're seeing something opposing actually, as traditional financial market participants, funds, institutions are not only adapting Bitcoin as in last cycle, but also making vehicles, financial instruments to better invest into them. So we see kind of a merge of these two worlds, which were opposing back then. So what to expect now? There are arguments for price going up and down as always, and we will look into both of them to give you a better feeling where you should put your money. The first thing we have to notice is that the Bitcoin ETFs are buying up real Bitcoins. This is not some kind of derivatives kind of thing where they are speculating only on price, but rather are they reducing the real supply of Bitcoin. So that basically means if you buy a Bitcoin ETF, you are buying real Bitcoins. But this Bitcoin doesn't belong to you, and you also can't get them instead of the Bitcoin ETF. The institution is holding them for you. And in turn, the institution is working together with a custodian. This custodian for most of the ETFs is Coinbase Exchange. So in the end, all your Bitcoins are stored on a normal crypto exchange without you really handling them. The faster this happens, the more of a supply shock this will mean in the end, and the higher and the faster Bitcoin will fly. Paired with the halving we can expect in the next couple of months, this could be a spicy combination and a catalyst for the next bull market mania. But this has a flip side as well. As we know from the last Bitcoin cycles, we have diminishing returns in general. This means that the percentage Bitcoin gains over the bull market period is getting lower and lower from cycle to cycle. And this is mostly due to more market participants, the market saturating. So if we get even more market participants, we have mass adoption on the one hand, but on the other hand, this means we're fulfilling this thesis of diminishing returns even further and could get a price action that's more comparable to indices like the S&P 500, for example. Of course, in the future, we could have additional parameters which change the course of price action for Bitcoin, and who knows, maybe we see some kind of parabola we had at the beginning of Bitcoin in a couple of years' time. Now, let's look at another very positive thesis by comparing Bitcoin to the gold spot ETF approval and what happened afterwards. As you might know, Bitcoin is often referred to as digital gold because of its scarcity comparable to physical gold. As you can see here, the gold spot ETF got approved in November 2004, and the price action afterwards is speaking for itself. We had years and years of bull market in gold just because of this ETF. If this is any indication, we can expect something similar for Bitcoin. If we look at this chart, we get the bigger picture. And as we can see here, we got from end of 2004 to 2011, a straight 7-year bull market, not 1 or 2 years, 7 years of straight bull market with 1 or 2 dips here and there. But this is heinous price action. Something like this for Bitcoin would put us, I think, over $1 million per Bitcoin. And I'm being realistic here. I think it could be way more than that, to be honest. Please let me know in the comments down below if you think that this scenario is likely, and hit the like button if you're ready for $1 million per Bitcoin. The next thing I want to look at is something more short to midterm, but it's very important, trust me. The last 2 times we had major announcements for the Bitcoin space were big sell the news events. They were even the tops of the last 2 bull market cycles. The first one being end of December 17, where the CME Bitcoin futures launched. This allowed investors for the first time to make money on negative price action. Then in mid of April 21, we had the Coinbase IPO. So Coinbase, as the first crypto exchange, got a tradable stock. Well, and now we have the approval and start of trading of the Bitcoin spot ETFs in January 2024, which could be a sell the news event as well, at least in the short to midterm, as I said. Alright, let's suppose we have a sell the news event. Where could this take us? In the near future, I will make a dedicated video where I will talk about where we are in the cycle and which price targets are likely for the upside and the downside. So in case you haven't already, please make sure to subscribe down below and activate the bell icon so you don't miss any of my upcoming videos. But for now, let me show you this very prominent resistance and support zone. This support and resistance zone established in January 2021, held for the first time in June, July 2021, was then broken in the bear market 2022, mid of 2022, and then held for over 200 days last year before it was broken for the ETF hype. So if we indeed get a sell the news event, similar to the last two times we had major announcements in the Bitcoin space, the first area I would look for a bounce or at least a sideways range is exactly here. If we indeed go up from here and don't get any sell the news event, at least in the short term, the first zone I would look at is this high zone from the first top of the last bull market. So approximately here, $58,000. The thing is, my expectation is we already had a quick relief bounce, got back right under, as I showed you earlier in this video. I really think also because we had this parabola here before the ETF approval, that we are kind of overheated. And therefore, my most likely scenario is that we go down here a little bit. Something that really adds to this perspective is if we look at the Bitcoin price on the 4-hour chart, and let me bring up the 200 EMA here. For the first time in this ETF hype parabola, we closed below the EMA. So if you take a look here, this is where everything started in mid of October 2023, and for all this time we didn't close below, and even if we touched it, we got a quick wick up, and now we got several closes on the 4-hour chart, which weakens the trend. Of course we can have a quick green candle up again, but this is something to keep in mind. And apart from all of this, please don't forget the famous quote, "The markets can stay irrational longer than you can stay solvent." By the way, a disclaimer for this and every future video, all of this is not financial advice and I am not a financial advisor. Always do your own research. I am talking about my personal opinion in these videos, and the content is for informational purposes only. If you stayed to the end of my very first video, please make sure to leave a like and subscribe to this channel down below. I really appreciate it. If you try to understand the markets, finance, Bitcoin and altcoins, trust me, just stay around. You will get everything you need to know on this channel in the videos to come. You want to be prepared. This year and next year will most likely be tremendous times for Bitcoin and altcoins. As someone who lived through this in previous cycles, I am very much looking forward to this. If you hit the bell icon, you won't miss my next videos. This was Phil Prince. Until then, crush the markets.